This is Bazaar Morning Call. Live from the CNBC TV18 Motilal Oswal studios in Mumbai.
With us here on a fresh new edition of Bazaar Morning Call. We are coming to you live this Thursday morning from the CNBC TV18 Motilal Oswal studios. I am Prashant, my colleagues Sonia and Nigel. Guys, hi, good morning.
Hi, good morning, Prashant. Good morning, Nigel. Not at all. In fact, looks like today is also going to be a pretty ugly day. But let's see how things for now. There's a large selling that we've seen from foreign institutions overnight.
Well, that's right. The heat is on in the equity markets, but I think, at least here in Mumbai, cooler this morning in comparison to the last few days, I think. So, pollution, I don't know. I felt it was still as much because, I was riding to work. But otherwise, it's a little cooler. So, hopefully, it's better times for.
Glad, Nigel, you felt that too, because I was wondering, I've been up since 2 in the morning last night. I couldn't sleep. And I woke up in the I sort of, got my neck out of the window. Cooler and not stuffy and muggy, right? So I said, well, is it because I've not slept or it's nice to get confirmation that it is cooler?
I'm wondering why you can't sleep. I mean, it's happening very often.
Yeah, I mean, I need to fix that. But, not tracking markets, that much I can tell you. I didn't look at markets at all. But, all right, let's just quickly tell you what you need to know and, sort of start with the most important stuff, right? The US market. And selling continues. You have sharp cuts overnight. The Nasdaq was down almost 2.5%. The S&P was down about 1.5% as well. The S&P is now firmly below the 200-day moving average, which is at about 42.38. The next level, in a way, for the S&P to watch out for is around the 41.77 zone, which is the 55-week moving average. We are pretty close to it. A weekly close under it opens up more downside on the S&P and then the US market as well. Yields, which on Monday, as we started the week, if you remember, in the second half, the 10-year in the US had hit about 5%. It actually hit 5% on Monday for the first time since 2007. Tuesday was a market holiday. We came back yesterday morning and, yields had sold off almost 20 basis points. Well, guess what? They're back at almost 5%. 4.95% of the US 10-year is where we are back at. What's going on? And I mentioned this yesterday as well. Data out of the US is strong, and the contrast is so stark. So if you look at the European PMI numbers, weak across the board. We had the PMI numbers from the US strong, right, above 50. And last night we had the September new homes sales, which surged about 12% or so. And that's the reason why, you call it US exceptionalism, right? That's the market which is continuing to grow at that size and scale at a pretty healthy clip as compared to anywhere else in the world. And that's the reason why you get yields which did what they did last night. But of course, equities are on the other side because, they're expecting the Fed to stay tight. Anyway, dollar index, that's back at almost, not quite 107, but 106.57. And by the way, this morning, I think the dollar has gone up a little bit more. Especially the Bloomberg dollar index, which is almost at, YTD highs. Interestingly, the space which has gotten hit the most is the small cap part of the market in the US. So I looked at, both monthly and year-to-date changes. The Russell 2000, which is the small cap index in the US, that's down 7% this month. It's down 4% for the year. Look at the changes in the S&P and the Nasdaq YTD. S&P still got 10%, Nasdaq still got 25%. Oil prices, they've also gone in the wrong direction. From our perspective, it's up about 2%. We are back to 90 on fears of Middle East escalation. So, that ground invasion of Gaza, which Israel has been talking about, it's not happened yet. But, commentary, etc., suggests that they will put boots on the ground and they will actually go in at some point in the future. So, we're not looking at de-escalation. We're only looking at perhaps escalation, at least in the near term. So, oil higher is not something we like. Anyway, the market here is sold off pretty hard. I think over the last many sessions, the Nifty is down some 600 points. And the levels don't change. We put these out yesterday during closing as well. Next supports for the Nifty stand at between 18,500 to 18,700 or so. I would reckon around, we don't get to 18,700, around 18,700, the market actually finds support. If we go there, that is. But it's entirely possible. Very short-term resistance on the way up stands at 19,400, which is slightly above where we are at right now. markets are oversold. I mean, they were oversold yesterday as well. The, RSI, for example, is now under 30, both on the Nifty and the Bank Nifty as well. Now, typically what happens that if you are in an uptrend, a fall and oversold readings on RSIs under 30 get bought. It's only in, bearish phases, right, on outright bear markets, which I don't think we are in one right now, that markets continue to fall even from oversold kind of levels. So in that sense, what happens today, what happens in the very near term, I think will also be important. We were saying yesterday, perhaps a tactical bounce somewhere there. It's due. We just got a 45, 50 odd point bounce early in the morning, and that's it. The market came off and continued to sell off through the course of the session. So keep this in mind. Next supports for the Nifty Bank comes in at about 42,300. I mean, same levels that we put out yesterday in the morning as well. We're at about 42,830, not very far away. I think we get there. Immediate resistance is the 40-hour exponential moving average, which is, slightly higher than where we are. I think about 43,400 or so is that one. Mid caps and small caps, they sold off yesterday, but out of the Nifty, the mid cap, small cap indices, Bank Nifty, etc., the small caps actually lost the least. They were down only 0.25% yesterday. Mid cap index was down a little more. But I would say, that part of the market, smaller cap stocks still, because they've done so much, you just have to look at gains from March 31st when the rally really started. I think that's the space which perhaps is a little more vulnerable. So be careful there. Not just mid caps and small caps, but lower down the curve as well, especially on the SME board, etc. The GIFT Nifty will come up on your screen. I think we are indicating a 100 points lower start straight off the bat at about 19,022. Sonia.
Well, it's been a bit brutal, right, for the bulls over the last many days. I mean, there's no two ways about that. The Nifty has lost quite a bit of ground, and today looks like it's going to be no different. So let's just pull up the Nifty chart for you. In fact, if you take stock of the last 5 days alone, the Nifty has lost over 3.5%. So it's almost a 700-point cut that we've seen on the index, 670 points in the last 5 days. That's the kind of bearish trend that this market is witnessing. Now, yesterday there was large foreign selling as well. Let's not forget that the US 10-year yield has once again spiked to almost 5%. I think 4.8% is what we saw yesterday. So the Qs are not looking good. There was large foreign selling to the tune of about 4,200 crores. Yeah, 4.95% is where the US 10-year yield is. So there is once again risk aversion towards equities globally, including a market like India. There was a sell-off on Wall Street as well. I think Nasdaq was the one that got hit the hardest yesterday. Nasdaq was down over 300 points, as you can see on your screen. But in terms of our own local cues, I'm watching out for two stocks. Axis Bank, the numbers were quite good. It was the best loan growth that Axis Bank has seen in the last 7 years. So the street will definitely like that. But on the flip side, tech companies continue to report, uninspiring numbers. In fact, Tech Mahindra's numbers saw a big revenue and margin miss. The constant currency revenue was down 2.5%. The adjusted EBIT margins were down 400 basis points quarter on quarter. So it looks like that problem is not over just yet. And if there is, further escalation of the situation, the geopolitical crisis, if it has an impact on the global GDP, on the US, etc., then one pocket that could get hit hard is the IT space. So keep an eye out on that. There was also, some other smaller numbers like Jubilant Foodworks that reported a weak set of numbers as well. So all in all, the bulls don't have too many great cues to latch onto this morning.
Well, that's right. And the global cues are in favor of the bears, right? If you look at the yields, the US markets, you look at the dollar index or even crude oil prices. So the bears have things going for it. The Nifty, the question is whether or not it drifts to around the 200 EMA or it sees some kind of support at around the 19,000 odd mark, which is going to be an important zone, particularly for today. Select technical indicators, though, they're nearing, oversold levels. The question is whether we see a bounce today or does it come in the next couple of days. But my reckoning is, say, in the next 2 or 3 days, we're in for a bit of a bounce, and it could be, close to around 200, 250 points as well. Depends on, how the global cues do pan out. Yesterday, the vulnerable pocket of the market actually didn't get hit very, very hard. So on Monday, we did see a sharp downtick. But yesterday, at least there were signs of buying in the small cap as well as the mid cap index. Remember, that's the vulnerable pocket. So we'd like to see that outperform because that's what's going to be affecting your portfolios where the big money has been made. So the broader markets should definitely be on your radar and look to buy good quality, well-run managements. The rollovers since today's expiry pretty much in line. The Nifty and the market-wide rollovers very much in line with what we have seen in the last 3 series. What do the FIs do? They added close to 3,500 short contracts. It takes a net short positioning to around the 74% odd mark. So that short positioning has gradually been holding at around the 74% odd mark. And yesterday as well, they had 2 shorts for every 1 long position. On the option side, they bought calls, and they bought closer on 2 calls for every 1 put. But the way they're writing calls tells you that at higher levels, we're going to see some supply. Yesterday, they wrote closer on 16 calls for every 1 put in trade yesterday. And what were they writing? The 19,200 call. Very, very active. The premium came down from around 150 at the start of trade to around 30 rupees. The 19,300 call as well. The start of trade, it was 70 rupees. It ended closer around 10 rupees. So that's telling you the kind of aggression we have seen. Which brings us to the level. Since the 19,200 call was getting written aggressively yesterday, the 19,250 level, well, that becomes the first level of resistance. Support comes in at around 18,950. And I say this because the 19,000 put has the highest open interest. The premium out there is around 20 rupees. So you need to keep an eye out on that. And if we break that level, then maybe we slide down to around the 200 EMA, which is a very, very important mark. So there's 18,600 to around 18,950. Oh, that's going to be a very, very crucial support zone. The Nifty Bank, that's been the weak pocket. Yesterday as well, it took a knock. The 200 DMA, which was acting as a bit of a support, that becomes a bit of a resistance right now. So that's around 300, 350 points away from current levels. But I was talking about the technical indicators that are indicating a drift towards the oversold levels. One is the PCR. That's moved to around 0.67 odd. And that's, the lower end of the range. Normally at 0.65, we do see a bounce. Next is the FI net short position. In percentage terms, it's at around 74%. But if you look at it in absolute terms, it's nearing the 1 lakh contracts. Normally, when you see the PCR move to around 0.65 and you see the FI net short position move to around 100,000 odd, you get a bit of a bounce. So we pull back to kickstart trade. The gift is suggesting a 100-point pullback. Maybe, in fact, at around 19,000, 18,950 to 19,000, you see a bit of a bounce. Otherwise, we'll go ahead to test the 200 EMA. So let's see how we close out the series.
All right. Well, lots to watch out for today, but doesn't look like it's going to be a good start this morning. Let's take it straight to some money market cues because the Gift Nifty for now is indicating that we'll have a 100-point cut this morning. But here is what you can expect on the rupee today. First up, Parul Mittal Sinha of Standard Chartered Bank says that limited moves in the dollar and oil, along with likely US dollar sales by PSU banks, help the dollar INR trade in a tight range. She expects the pair to trade in a range of 82.90 to 83.30 this week.
Okay, well, on bonds, Parul says that India rates continue to trade range-bound amidst volatile global rates, West Asia tensions and fears of potential OMO sales. She says monetary policy is likely to remain tight amid higher global rates and risks around food inflation. She expects 10-year benchmark bonds yields to trade in the range of between 7.3 to 7.4% this week.
Well, we have a lot of stock-specific action track for you. We get to that in just a bit in our special Top 10 segment. We're looking at Axis Bank, Sonata Software, Sona BLW Precision, Chennai Petro, Charlie Hotels. We have CMS Info Systems and GSW Infra. While stocks on the negative side, well, they include Tech Mahindra, Jubilant Foodworks, and Indus Stars as well.